Well, Citigroup CEO Vikram Pandit appeared on Cavuto last month, the day he took the top job. At the time, he wouldn't say he would cut the dividend, but if you listen closely, he didn't rule it out either.
The dividend is sacrosanct. We're not touching it. But you've been given this enormous power to come in and, I'm not saying to Bigfoot them, but to at least look at the dividend, right?
The board has made that decision, and it's the board decisions. As far as I'm concerned, my job is to focus on productivity, making sure the businesses are positioned well for the future, and focusing on the talent we have and the culture surrounding that talent. I'm going to do that. That, to me, is what's going to create returns for the shareholders.
All right. You're very good at this interviewing thing, by the way, Mr. Pandit. But to that point, is it fair to say, because of the board's statement on the dividend, that you are against, Vikram Pandit is against cutting that dividend?
Look, I'll be very clear. It's the board's decision, and they've made that decision. Okay. And I'm going to just leave it at that.
Well, he may have to do more than just leave it at that eventually. Now that the dividend has been cut, is it possible that might eventually make the stock more attractive to investors in the long run if Citi's able to turn things around? We've got our Fox panel here to talk about it. Terry Keenan from Fox News, Tom Atkins from Remax Fairlawn, Alex Markels from U.S. News and World Report, and Peter Schiff, author of Crash Proof. Terry, first to you, clearly the market, I mean, Citi is down 7% today, did not see this as good news, clearing off the table.
They didn't see it as good news because in addition to the subprime mess, they're starting to have problems with their credit card portfolio. Delinquencies are over 5%. I wrote about this in the New York Post last weekend. This is the next shoe to drop because these credit card obligations have been securitized. They've been sliced and diced. It's the new
just like the mortgages.
And I think they're going to have to take huge charges for that going forward. And Meredith Whitney, who's been dead on about this, thinks that the charges could go as high as $10 billion in addition to what they took today.
Meredith princes out Whitney, yes.
Exactly.
All right. Well, Peter Schiff, you've been talking about this credit card problem for a long time. Explain how Citi's now embroiled in all this.
Well, I mean, it's the same problem, but I think the credit card problem is going to be a lot bigger than simply the mortgage problem as far as the typical American consumer, because it's going to affect everybody, not just homeowners. And it's my feeling that before the end of the year is a lot of Americans are basically going to have their credit cards taken away from them because lenders are going to dramatically reduce their credit lines, and people are just not going to be able to buy things. American consumers are not going to be able to buy anything that they can't afford to pay for with cash. And as far as, Citicorp stock, if people are thinking about buying it as the bottom in, I mean, this stock's going to keep falling. I mean, it's got a long way to go. I wouldn't even think about buying the stock right now.
Tom, I think back to Warren Buffett. In December, a lot of folks were thinking maybe those financials have come down enough so that Warren would get in. He didn't. It took all those sovereign funds from the outside. Once again, looks like he was right.
Yeah, I'm looking at Citi, but on one hand, it looks like a bargain because you're looking at somewhere between 7 and 9 times earnings. You're thinking, like, that's great, but the problem is, where's it going from here?
Yeah.
And it's scaring people. Like, they've written down $10 billion on the subprime. There still might be more to go. And Peter could be on to something here because the credit card issues could be greater than subprime. There's a lot of money out there. At the same time, if this really is the bottom, and some people are fishing, I mean, look, Sandy Weill's buying it right now. And the reason for that.
By the way, Alex, these are post-tax losses. That is, the pre-tax losses would actually figure a little bit higher. In fact, in some cases, a lot higher, correct?
Oh, yeah, well, we're talking write down. But let's just step back a bit. It is the case that over a long period of time, at least over the last 8 months or so, what we've heard is the worst is out. Go ahead and buy on the news. I mean, in an up market in general, it's been buy on rumor and sell on the news. There's going to be a bottom, and it's going to come relatively soon. The amount of pessimism out there is stunning. And my own feeling is that this is probably a time to start at least looking at where you want to get in.
Well, Terry, I don't want to give Peter Schiff any more ammunition than he already has because he comes loaded.
I'll give him some ammunition.
All right, give him some ammunition.
Tom says, well, the Citibank stock's only trading at 7 or 9 times earnings. That's what financial stocks used to trade at before they became all souped up, and started to do all these other derivatives and started to get income
all the stuff that the hedge funds used to do.
From all these other sources. And, the next shoe to drop, I think it's going to be the leveraged buyout loans. All those companies, $1 trillion worth that were taken over, those companies are going to be having the same problems as the public retailers and the public home builders and the
Would
public
that be even more cash
companies.
than what we've seen in the mortgage? Hold on a second,
business?
Peter. Would that be even more cash than what we see in the mortgage-backed securities?
Well, I don't know if it'll be more. The credit cards are about $1 trillion. There's about $1 trillion worth of credit card loans out there.
Yeah, go ahead, Peter.
Well, you're talking about, though, the immediate impact on our consumer-based, bubble economy. When Americans can't use their credit cards, that it's going to have an immediate impact on, everybody's sales, and then a lot of people start losing their jobs because no one's, shopping in their stores, and so now they can't even pay their mortgages, even if they got a fixed
Peter,
rate.
the problem with when you say things like somebody's going to, it's not no one shopping in their stores. Not everybody's going to lose their credit cards.
I'll be shopping, I promise.
Isn't it only going to be, Peter, those who can't pay their bills, and frankly, that's a fraction of the total.
No, but there's just too much risk. There's too much risk lending money to people to go out and buy, furniture and television sets. I mean, this whole thing I spoke about on this show before, consumer credit from an economic point of view makes no sense.
Yes, but Tom, most people have good credit. While it is frightening how many people are going through bankruptcy or the motions of bankruptcy, most people have good credit.
Most people have good credit, but if things slow down, most people will stop spending quite as much money.
But most people are probably one paycheck away.
And then you have, on the other hand, you have people who simply just will stop spending, even though they have good credit.
I want to go back to our optimist, our lone optimist, Alex. I got to say, I got one email saying that the fact that the dividend was not cut 50%, which is what a lot of people were expecting, shows that Citi has, quote, not yet confessed to all of its sins. Agree or not agree?
In 1975, General Motors cut its dividend and the stock tanked. At that time, General Motors was a buy because over the next year, the stock doubled.
Heading off the pass is not necessarily
a bad idea. So that's your logic for buying Citigroup?
That's got to be the last word. Gang, we'll come back to this a little later. Well, irrelevant. Should lawmakers be focused on steroids or economic stimulus? Is Congress taking its eye off their ball? Our Fox panel steps up to the plate to take a swing at that topic, and we are now joined by Victoria Barrett, who joins us from Forbes out in San Francisco. Good to see you, Victoria. So what about this? They're spending a lot of time on this issue, getting some press time, but meanwhile, we got the banks going insolvent, and solving a lot of other problems.
Sure, there are a lot of problems, and I have a disclaimer here. I am not a big baseball fan. I only watch sports by accident when someone else in my home happens to be watching them, which is a lot. But I think this is great. The counterintuitive take is that Congress is distracted by this stuff and isn't going to meddle in our economy. Look, there are a lot of problems right now in our economy, but the solution isn't in Congress. The solution is in the markets working this out, which is what has to happen. Anything Congress does in the form of a stimulus will just prolong the problem, in my mind.
Tom Atkins?
Well, I think it's an irony that the party that is famous for surviving by lying, cheating, and stealing is now investigating people who lie, cheat, and steal.
All Congress people do that.
The best part about it is here's a party that defended the president's right to lie about molesting women in court, and now they're upset about baseball players who might have been lying in front of Congress about doing steroids. This is stupid. This might be 697 on the list of important things facing America, but it makes sense that this Congress is facing it first.
Alex, go ahead.
Look, it's absolutely reasonable to bring George Mitchell and Douglas Fair in front of the committee. It wraps up an investigation that was important for, look, this is America's national pastime. But I take exception to their interest now in bringing in Clemens, because the only thing that's going to come from that is just more ugliness.
Yeah,
so
ugliness. It's going to be a zoo-like environment, yeah.
It's going to be so ugly, and the thing is, it's going to undermine potentially George Mitchell, or it's going to catch Clemens in a lie.
But Peter, I bet a lot of people are going to be watching. If you have McNamee and Clemens side by side, how many people could turn away from that?
Yeah. Well, look, talk about fiddling while Rome burns. But the Congress shouldn't be concerned with either. We don't need a stimulus package. I mean, the last thing we need is Americans to spend more money. I mean, that's how we got into this mess. We're broke. But what the government can do is recognize that it's a huge burden on the economy, that we are broke. We can't afford this gargantuan federal government. And what the government can start doing is slashing programs, cutting spending, so the government is less of a burden on our economy, so that we can dig our way out of this hole. But it's going to take a long time.
Not a bad alternative to focusing on steroids.
No, I agree. I mean, we don't need Americans to spend more. And I also agree with Victoria. I mean, let Congress have their little play dates with their favorite players, and it's better than them meddling and making this situation even worse. But there's laws on the books. If this is illegal, it's illegal. It's the same thing when they call up the CEOs on insider trading. Insider trading is against the law. If you trade on inside information, whether you're a CEO or janitor, you should pay for it.
So Victoria, it's got to all be for show, right? I mean, we know that Clemens is going to say I didn't do it. We know that McNamee is going to say I did, or he did do it. I did shoot him up with steroids. So basically, it's just theater. That's it.
It's great theater that distracts everyone, including Congress.
What did you say, Alex? Go ahead.
It's ratings, just as you said. If you want to pump a little action into the economy, why not start with some advertising dollars from televising all of this?
Yeah, and actually, let's look at things, Tom. We have Congress with ratings about half of those, which President Bush does,
deservedly.
And maybe they want to take the eye off the ball that they're not hitting, which is what Peter was saying. They should be talking about where they're going to be cutting taxes, where they're going to be cutting spending. Instead, they focus on baseball because they know it's an easy thing.
I've talked to members of Congress, a lot of them, and I'll tell you, when it comes to economics, most of them, they're about sharp as a bowling ball. They don't know anything they're talking about. They're clueless.
So is it better to have them talk about baseball?
If the Congress has the king Midas touch in reverse, everything they touch goes to hell. Stay out of the economy, cut the taxes, and just get lost. We'll take care of it ourselves.
So, Peter, wouldn't you rather have them talk about something where they could do no harm?
Well, I mean, unfortunately, that's all they tend to do is harm. The government, they grow their power base. They increase their regulation. They increase what they spend and what they take in taxes. Unfortunately, politicians don't want to shrink government. They want to expand it. We need to change the attitude in the government and get them to understand that it's expensive for the economy to maintain this level of government.
Peter, do you realize what an extraordinary day this is? Everybody is agreeing with you. We've had 2 segments now, and nobody is disagreeing.
Well, I must have misspoke somewhere.
Nobody from Congress ever lost their election by promising free beer. If you give people stuff for free, they'll think, well, I'm going to vote for that guy again. So look, Peter, you and I disagree on almost everything. This is the one thing that you're my long-lost brother on.
All right, let's leave it at that, folks. A tear is coming to my eye. Well, the tax man... Well, let's go back to the issue of oil. There's no relief to the pain at the pump will be coming from the Saudis. The president is touring the Mideast, and Saudi ministers saying they will not boost oil production, quote, until the market justifies it. What exactly would it take for them to start pumping a little more crude out of the ground? Let's ask our Fox panel. Terry Keenan, first of all, let's put a little history in here. 1990, we were going into a recession. Then President Bush, President Bush's father, got the Saudis to increase production a little, which lowered the price. Then we went into a recession, and the price tanked. It went down to $10 a gallon. That's what the Saudis are afraid of.
That is what they're afraid of. The other dirty little secret here is they don't have much more oil to pump than what they're already pumping. Their reserves are fairly tapped out. So
really?
I think that's another reason that the Saudis are saying we're not going to pump anymore.
So that
also we're going into a U.S. slowdown, if not a global economic slowdown.
So that doesn't sound very hopeful.
No, and if you're any oil-producing nation, you have a fairly limited supply. When it's done, it's done. I can think of no. If I'm in the Saudi government, I can think of no reason why I would change production at all. What to make us happy? To help the Hillary Clinton campaign because she promised if she gets elected they'll just do it.
Well, and Peter Schiff, they need all of our dollars so they can buy up all of our banks, right?
No, they don't need our dollars. The problem isn't.
I was kidding, Peter. I was kidding. Go ahead.
the problem isn't not enough oil production. It's too much money printing. We're printing money. That's why it looks like oil prices are rising. The value of our money is falling. And you mentioned earlier, when we have a recession, yes, we're going to have a big drop in demand for oil here, but the dollar is going to fall sharply during that recession. That's going to ignite a boom in demand for oil abroad. So even though we're going to be in a deep recession, oil prices are going to keep rising for Americans.
And Victoria, we hate to agree with Peter, but the fact is, if we had linked the dollar and gold about 10 years ago, oil would be at about $30 a barrel.
30. Right, and if we were paying in euros, we'd be paying about 57 a barrel.
Yeah.
The problem here is exactly what Peter points out, which is that our currency is very weak right now. So it isn't a question of supply and demand. Demand hasn't spiked as high as prices have spiked. It's the dollar.
Go ahead, Alex.
Why don't we raise the price of the arms that we're selling the Saudis? We just sold them $100 million worth of missiles to fire against their enemies. If we have any leverage against the Saudis, it's in the arms that we sell them. I'm not saying that actually them raising quotas on what they produce is actually going to make a big difference in a market in which China and India, for example, are consuming more and more. But look, if we have leverage against the Saudis, it's the guns that we sell them. And maybe we should tell them we don't want to sell them any more guns.
We do have some leverage. We should use that.
Like
we got to leave it at that, gang. Thanks very much. Well, it's heaven. Great to see you. Well, if Intel has a good quarter, will that force some of the doom and gloom economists to reboot their theories? After all, tech shouldn't be performing well in a recession. Let's take that to our Fox panel, including independent financial trader Johan Sjöldström. Johan, let me go to you first. What happens, of course, we don't know yet, but what happens if Intel has a better than forecast quarter?
Well, I think Well, first of all, thank you for having me. I don't think that that's going to change a lot. I think we have a slowdown happening, and I think it's going to be a little bit of a global slowdown. But however, at some point in time, people still need to buy computers. The rest of the world is growing at a very, very fast pace. And at some point in time, when Vista comes out, really comes out in the rest of the world, I think you will see chip makers starting to make more robust sales.
Well, let's hope so. But they are being beaten down right now, Victoria Barrett.
Yeah, they are. I think the expectation was that tech might get a lift because IBM had a good earnings announcement, and that hasn't happened. It seems, and the two companies are different, right? IBM has a lot of recurring revenues from maintenance contracts. Oracle's the same way. They do most of their sales to enterprises. Intel has a lot of exposure to the consumer. Are people going out and buying PCs and laptops? That's what matters to Intel, and the answer is probably that spending is going to decline in the next 6 months. On the other hand, these stocks could look cheap pretty soon.
Well, and on the other hand, Terry, we have Steve Jobs today out with the newest thing, which happens to be one of the thinnest notebooks that's ever been made by Apple. In fact, they say it's the world's thinnest notebook computer. I won't go through the dimensions, but it is super thin. So they've got new products.
And I'm sure it will be fabulous. And, of course, Apple, one of the best performing stocks last year, as was Intel. But look what's happening to Apple today. I mean, if we're going into a consumer-led recession here in the U.S., Apple is not going to hold up, and people aren't going to be spending $1,900 for no matter how great this new laptop is. And I'm sure it's late. I'm sure it's fabulous. I'm sure it's everything Steve Jobs could have dreamed of. But if we're in a consumer recession, well, and
Tom, to Terry's point, Apple is down 7% today, the stock price.
Yeah, but here, I think there's a big picture thing. This is something Johan touched on. I think he's dead on this one. You have this constant drumbeat of things that go up in price, typically commodities. But in fact, it's always a battle between the commodity prices rising and productivity bringing prices down, especially in the area of electronics. So, and the thing that Johan hit on was the big picture. It's a worldwide thing. It's worldwide commodities and worldwide productivity. And that's the great battle you're seeing, and that's one of the reasons, incidentally, why the dollar keeps getting pounded, because the other economies are actually getting stronger than they used to be, and they're getting stronger at a faster pace than ours.
I know Peter wants to weigh in here, but Peter, I got to say, the one bone I have to pick with you, and I do think you've been extraordinarily prescient in terms of what's happened, but is you tend to discount, I think, too much the productivity gains that we have made over the year, which have been extraordinary, and the United States has been leading the way in productivity gains because of because of our computer successes.
No, we haven't been leading the way. It's foreign economies that have been doing the real production. Our productivity is a myth. It's created by accountants. They use hedonic judgments.
It's created. Our productivity is created by people working hard to invent new products.
David, no, we have a $65 billion a month trade deficit.
So
that
what?
means we're not producing.
We're importing some of that productivity.
Wait a
That's what
minute.
he's trying.
All right, go ahead. Finish your point, Peter.
If we were being productive, we would have a trade surplus. You can't be productive without producing stuff. This is a government illusion.
You are dead wrong, and I'll prove it very easily. I pay somebody $20 an hour to come and clean my house once a week. My time's worth about $2,000 an hour. Now, Peter, by your thoughts,
you don't understand.
$20 an hour, and I should go clean my house and spend 4 hours doing that.
Let me finish to making my points.
Wrong.
Because you don't understand the first thing about economics.
No, Peter, you don't understand economics.
No, if you understood economics, look, if you understood economics, you wouldn't have been saying housing prices were going to go up 10% in 2008.
But Peter, hold on,
because
gang. I don't want to get too esoteric with these economic figures because, in fact, Peter, there are some very good economists who say that the trade deficit doesn't matter as importantly as you think. They may be wrong. You may be right, but not every economist agrees with you. Go ahead.
Sure, and those economists, if they're investing money, they're losing it. If they're advising clients, their clients are losing money because they don't understand economics. They don't know why the dollar is going down.
Johan, let me go back to you for a second. Johan, what about productivity? Doesn't that account for at least some progress in terms of what we've been doing and the way we manufacture things more efficiently in this country?
Well, absolutely. Productivity, of course, is important, and Tom has a good point in the fact that if you spend $20 to come in and have somebody cleans my house, and I can go out and make $2,000, even though I think Tom is exaggerating a little bit, but to the point. But at the same time, our trade deficit, of course, does worry me, and it does affect the dollar, and a lower dollar also affect oil prices.
Victoria, go ahead.
What I care, productivity. Look at what technology has done for the average person's day at work. Email, web communications. We don't have to travel as much as we used to. You've got online marketers.
But it's not translating into more production.
With buyers.
It's not translating into more goods being produced.
It's increasing the value of every person's hour, Peter. That's huge. You can't say that that's a trivial effect on our economy. It may be hard to quantify.
No, he can't say it.
I'm not saying. Look, I'm not saying. It might not be true.
Hold on.
All right.
I'm not saying
let's give Peter the final word. Go ahead, Peter.
I'm not saying there's no positive effects of productivity, but they're being overwhelmed by all the negatives. Our economy is screwed up. Why do you think I know the stock market's going to fall like this? I mean, it's not coming out of thin air. Why did I know that dollar would do what it do?
Because you've been predicting it for 20 years, Peter.
No.
Every year you come out and say the economy's going to hell. The economy's going to hell. And when it doesn't say, I told you so. In the meantime, the stock market's quadrupled since you've been starting to
There isn't a single prediction that you've made about the market that's come true. Not one.
All right, that's got to be the last word from my friend Peter. Well, American Idol is back, and so are the other realities. Well, money issues driving the Michigan primary. Is that proof? It really is the economy. Our Fox panel is back now to talk about it. I didn't want to say stupid at the end of that topic because I knew I was going to come to you first. But is the economy clearly? Iraq is gone because the surge appears to be working militarily. So that's disappeared. That's why McCain is surge. So it's all down to the economy.
Yeah, and let's look at Michigan for a second. Here is a state that's the old-fashioned Democrats, where it's taxes spend, soak the rich. Your unions are out there to kill the company, and you know what they did? They killed the companies. They all went somewhere else. Rich people left Michigan. They have one of the highest tax rates. Look, if you're in Michigan, listen very carefully. Vote for Democrats. You might as well stick a knife right in your own heart. You're a fool. You're an idiot. Why? Because Democrats are out there raising taxes on you. And look, this is a good example. The #1 cost of a car manufacturer in the United States isn't union wages. It's union benefits, especially the jobs bank, where you pay people to sit on their butt who used to work and don't need them anymore. They sit at home. They pay them almost the same thing they get if they were working. It's nuts.
Terry, could you be a little more blunt for us?
I'm sorry, Tom. The reason the U.S. automakers are in so much trouble is a failure of imagination. Japan is not a low-cost producer. They are eating our lunch. In the emerging markets, Tata Motors is eating our lunch. They're coming out with cheap cars for $2,500. You mean someone at General Motors, the 40,000 people they have sitting in the corner offices, couldn't come up with an idea like that?
You're not wrong, but they work together. But what happens is if you take that money money that you could be putting into R&D and creating new and better cars, and you pay some guy to sit on his butt at home and watch TV, you're not going to make a new car.
Steve Jobs could make a great car.
Although, Victoria, I got to say, not many Americans would buy a car without air conditioning and a radio and everything. That does go with the Tata cars. It's a very
like
stripped-down model. Yeah.
This big.
Yeah, it's sort of designed for people that are coming out of pretty much what we would call abject poverty into the lower middle class.
Right, right. You know, Michigan's problems are a lack of imagination, certainly, huge union woes. And that's not something that Romney can fix. You know, he was a consultant and probably did a great job at telling companies how to streamline their operations, which usually translates to lost jobs. Yeah. So I'm afraid that Michigan, what's going on there right now, really shows the two-faced sides of the current Republican candidates.
Although Peter, we should say that his father was governor of the state of Michigan, so he's got a familial connection to the state.
But there's nothing he can do. He can't help the economy there. He can't. There's nothing that he could do. He's just demagoguing. But yes, the economy is going to be the issue in the election, and unfortunately it's going to work against the Republicans because there's going to be a lot of unemployed people come November who have no equity in their homes or negative equity, that can't afford food, they can't afford energy, that are struggling in probably the worst economy we've had, you know, in our lifetimes. Yeah, they're not going to want to vote back the Republicans.
By the way, Peter, we should let people know that the reason you think the only person who doesn't demagogue is I was going to say Ross Perot, is Ron Paul, is because you're for Ron Paul.
Sure, but I mean, electing Ron Paul, even if we could pull off a miracle like that, it's not going to put off our day of reckoning. We have a serious problem to deal with for years of borrowing to consume. We've bankrupted our nation. It's going to take a long time to rebuild a viable economy, to really start producing again and exporting and making stuff. But, you know, we can't do it without a huge recession, and it's coming. But unfortunately, the voters are going to blame the incumbents, and I'm afraid that the Democrats are going to make things worse.
I don't completely agree with that. I think that we need to take this recession seriously. If it is a recession, it could just be a slowdown. However, we have gotten ourselves into a little bit of a trouble. We have borrowed too much money. But right now, the last thing we need is to Washington to get more involved. We need to resolve this ourselves. The economy and the companies and the stock market will take care of this. It's going to be a little painful for a while, but eventually it will come back.
Well, you know, Peter, I agree with Peter. The rate things are going, Barack Obama is going to be promising bars of gold to voters by November. The only hope for the Republicans is that the last two times that we've been in or coming out of a recession on Election Day, a third-party candidate has captured a big chunk of the vote. That was John Anderson in 1980 and Ross Perot in 1992. So that could be salvation for John McCain or whomever the candidate is.
I'll tell you what the salvation for the Republicans is going to be is the fact that most people hate Hillary Clinton. Now, I'm not saying that to be funny. I'm saying that to be true because
Hillary Clinton may not be the nominee.
She may not.
Democratic Party.
But here, Barack Obama is just so naive, and he's really. And I don't think race would be a big issue with Barack Obama. I think he's just a very naive man with bad ideas. But I think if you look at every election since television came into being, typically people vote for the guy they like the most. And
not when they're in a deep recession.
No recession, the guy they like the most almost always wins.
All right, by the way, Victoria.
They voted for Jimmy Carter over Gerald Ford.
True,
he's a pretty likable guy.
There is a big minority that hates Hillary Clinton, but most people don't hate Hillary Clinton. Most 52%. People are not obsessed by her.
52%.
No. And I think voters are warming up to Hillary. You know, she's kind of, I'm sure she's worked on this, and it seems to be working. We saw what happened in New Hampshire, so I don't count her out of this race at all. But people do vote with their hearts, and I think Huckabee's rise and his great performance in Iowa shows that.
Look, unfortunately, the Republicans are going to get blamed for the mess, right or wrong. The free market's going to get blamed for the mess, and the government's embracing socialism and bigger government are going to be the Santa Claus and appease to the voters, and they're going to get the votes. And unfortunately, they're going to make everything worse once they come into power, but that's what's going to happen.
Yeah, I'm afraid Peter might be right, and, you know, Bush is going to go out bookend by 2 recessions. One
That's
of them
true. perhaps
not of his making, but he's going to go out as
Well,
the
actually,
guy.
the recession was over when he became president, right? According to some statistics.
It depends.
Well, the reason that
we were already into it.
The reason this recession is going to be so bad is because the first one was so shallow. We postponed the pain to re-elect George Bush, and now we're going to have to live with it. And this, as I said, is going to be the worst recession
if there is one,
we've
you
ever
may be right,
experienced.
Peter, because everybody agrees that those rates were kept down a little too long. Well, tough earnings.
But I was criticizing it as he was doing it. I didn't wait till after the fact.
As you always are, 100% right. Peter, we got to move on. A tough earnings call for Citi. How did things get so bad? We're going to take a look next on Fox Business. Well, Citi's massive $10 billion fourth quarter loss. We've heard all about the subprime, but how did they blow it so badly? Let's take that question back to our Fox panel. First to you, Terry. Clearly, everybody was expecting bad things to happen. They looked at the numbers. The numbers weren't so far off of what they expected, were they? So why is it down 7% today?
Well, it's down 7% because of what Sandra was talking about, the decline in the consumer business and those revenues declining 60 or 70%. The delinquencies are about 5%. In the last recession in 1991, credit card delinquencies went up to 9%. We're seeing American Express, the blue chip credit card issuer, with already their delinquencies are topping 5%. And they said that there was a quick and sudden decline. You remember when American Express sold off sharply, almost 10% last Friday. The CFO there said that there was a quick and sudden decline in credit card payments in December. So this train is moving very quickly.
And Johan, we heard Peter Schiff say earlier that, in fact, this may lead to tremendous cutoff in credit cards. A lot of people will just be totally cut off and won't have the cash to spend, won't have the credit cards to spend. So consumer spending should really be hit by this.
Sure, it's going to fall off the edge of a cliff. I mean, this is
hold
just
on,
getting
Johan.
started.
Go ahead, Johan.
Yeah, no, there's no question about it. The consumer is being hurt. The ATM machine, which used to be the home equity line of credit, is now gone because the money is not there. Nobody's going to lend it to them. And this is really what has fueled the economy over the last 6 months, maybe even the last 18 months. The fact now that credit cards are starting to default at a higher rate than we've ever seen before is a clear sign that the consumer is really starting to slow down. And this is going to take some time to work out. But again, like I said, the last thing I want now is more rate cuts. It's just going to increase the price per oil. It's going to decrease the value of the dollar. And then we're really hurting ourselves in the long run. And we got to stop looking at the 6-month picture that everybody looks at. We need to look 5-10 years down the road.
Don't underestimate how long this is going to take to unwind. I mean, we have never gone into a recession with this much debt before. I mean, it is unprecedented the amount of money that we have borrowed, particularly from the rest of the world. Yes, it is. We didn't borrow it from ourselves.
It's 1.5% of GDP. It's nothing. It's a texture off the Queen Mary, Peter.
No, you have no idea what you're talking about.
I have any idea.
None.
We had debt out the yin yang during the 60s and 70s, way more than it is today.
We didn't borrow anything like this. And at least back then,
I can't believe
we
it's
borrowed.
blatantly wrong.
We borrowed to build factories. We produced things. We had a trade surplus in the 60s. This time we borrowed to buy houses, to remodel our bathrooms and our kitchens, to buy television sets and offices. We can't pay this money back.
Peter, they're not taking their money and buying beer with it.
No, look, 2 weeks ago you told me that you're not buying any gold, you're buying houses. And you can see what's happening to gold and what's happening to houses.
A lot more money in houses than you're making in gold.
No, in a couple of years you'll be broke, but it's okay because you can clean my house.
Well, the problem with the credit card debt, which is about $1 trillion, is it's unsecured. When you go out and use that plastic to buy, a pair of shoes, perhaps, the bank's not going to go reclaim my shoes. So this is a big problem for the banks, and that's why J.P. Morgan Chase, which is the best-run big money center bank run by Jamie Dimon, that's why that stock's down 5.5%. It's not Citigroup. It's down because of the credit card problem.
Could it be that these credit card debts are even worse because they are, as Terry said, unsecured? That is, you don't, if they default on the debt, you don't get a house like you do with a mortgage.
You get nothing.
Yeah, David, I think you make a very good point. The fact that it's secured on the mortgage side and it's not secured on the credit card side, and I think that we're going to see credit cards, people being behind on their payments, going to increase and increase. And Peter also makes a very good point. We've borrowed a lot of money, but we haven't borrowed money to invest. We've borrowed money to spend.
Yeah. Also, the mortgage debt too. That's only partially secured because the security, the collateral, is not worth nearly what people lend. That's the problem. They're way undersecured.
Okay, we got to leave it at that. Thanks, gang. Well, investors who ended up. We got a Fox News alert. We've been telling you about that 12,500 number. We haven't told you about 12,552.96. That was the number that the Dow ended at on April 12th. 2007, quite a while ago by trading standards. So 12,552 is a number that, as you can see, the Dow is already below. If it holds to that negative side, we will be in territory we haven't seen for quite a while. Back now to our board of contributors. So, Peter, I know you think that something close to Armageddon is coming. Is there any news on the positive side other than that which is outside of our borders?
In less than half an hour, if you can do it, Peter.
No, come on. Go ahead, Peter.
Well, look, I mean, the market is going down. It's going to go a lot lower. I mean, that's what I've been saying. Even gold is down today, the Dow is still down more than gold.
So
the Dow
you're
is,
saying, but let me try to fix you on a number here. Do you think it's going to go below 10,000?
Well, look, I think it's going to probably go to 10,000, but more importantly, it's what happens to the Dow in real terms. The Dow is now worth only 14 ounces of gold. I'm 100% confident that before the year is over, the Dow will be worth just 10 ounces of gold. That's down from 43 ounces of gold in 1980, and it's going to keep falling. And by the time this bear market is over, whether it's 5 years from now, 10 years from now, I don't know.
Peter, can you do me a favor, just for the folks out there who might not know? When you say it's valued at so many ounces in gold, what do you mean by that in a nutshell?
Well, you take the value of the Dow and divide it by an ounce of gold to get a price. Because the problem with valuing the Dow in dollars is the dollar is losing so much value. In 1966, the Dow was at 1,000. In 1982, it was 1,000. But people think, well, gee, it didn't go down. It went down a lot because the dollar lost a lot of value.
Okay,
gold
all
was
right. Let me go to Terry now, just to say that what he says about the devaluation of the dollar, certainly in the past 10 years, is absolutely true.
And you don't have to be a best-selling author like Peter to figure that out. Millions of Americans in their 401ks have figured that out, and the international funds have been where all the money has been going. I mean, there's been some outflows in the last couple of weeks, but in the last 2 years, international funds have been the real winners here. So, intuitively, people have figured that out, that the Dow in dollar terms is not that great.
Tracy Burns is down on the floor of the New York Stock Exchange. Tracy, I guess since we are at numbers that we haven't seen since April, people down there are quite concerned.
Yeah, absolutely, David. And as you were saying, that if we blow through that number, odds are good we're going to keep going for a while. There's a lot of negative sentiment. You guys have been talking about this all day. There's a lot of unknown, especially with the financials. Are the shoes going to continue to fall, so to speak?
I mentioned it a couple of weeks ago, but this is really the neckline and the head and shoulders top and the Dow Jones. It's a very reliable technical pattern, and this market's going to look very, very weak closing down here. I mean, we could gap way down tomorrow, unless we get some kind of surprise rate cut that might save the day for, a day or two. We could be in a lot of trouble in the next few days.
Johan, what do you think happens in the next couple of days?
Well, I still think that the main theme that we're going to see here over the next month or so is volatility. The fact that we have all the bad news that we talked about already. The other part of it is Wall Street hates uncertainty. We have an election where the first real surprise winner was Huckabee, who is really not particularly Wall Street friendly. Then we go into New Hampshire, or prior to that we also have Obama, which is also not very Wall Street friendly. And as I said, Wall Street hates uncertainty. But if we take the Dow down to 11,000, we have an intrinsic value that is at least fairly valued. So, yes, we may have another 10% on the downside, but I think that's about it.
So, Tom,
I think
even without the housing and the credit card worries, there is concern about politics, too.
Politics is like this big, giant shadow over the whole thing. You get a Democrat Congress and Democrat presidents.
You've got a Democratic Congress.
That's what I'm saying. If you get and a Democratic president together, you're going to, and this is not the Bill Clinton Democrats are talking about. This is the Democrats of the tax and spend variety. They're way worse than Republicans.
Well, Tom, if Ron Rubin is part of the administration, they're going to run pretty effective.
Anymore, and Barack Obama sure is going to hire him if he gets elected. But here's the thing that drives me crazy. Listen, everybody talking about all the things that have created this terrible market. The number one reason we have a tough market right now is because the Federal Reserve screwed up. They raised the Fed funds rate from 1% to 5.25% inside of 3 years. That's
they didn't screw up by raising rates. They screwed up by lowering them.
When you change rates 525%, you're going to crush any economy, and that's what's happening right now.
They wouldn't have had to raise it 17 times if they didn't lower it to 1%, which was an artificially
and they kept it at 1% for 1 year.
Rate. And now Alan Greenspan has signed up with Paulson and Company. John Paulson, who's
tell us the irony of that.
He's been shorting this housing market. He made $4 billion
so in other words, the guy
shorting the housing market. He's a good guy, but Alan Greenspan's going to come help him.
So Peter, you gotta love the irony of the fact that Alan Greenspan's new job is with a guy who was betting against housing continuing to go up the way
Alan Greenspan helped make him rich by setting the stage that allowed him to do that. But, you know, on stock market valuations, you're valuing the Dow based on earnings projections that aren't going to materialize, and interest rates are headed a lot higher. So when you try to figure out what the value of the Dow is, you're going to have a lot lower earnings and a much higher interest rate. Who knows what the
Tracy, did the folks down on the floor see a bottom to this?
Absolutely. I mean, give it 6 months. You know what? This is a bear market or recession or call it what you will, but it's not Armageddon like everyone's saying. And you know
everybody isn't saying that.
But you know,
Peter.
Peter, just coming up before. Peter.
Tracy, go.
Please. You know what? The traders are suffering because this is what they do on a day-to-day basis, but over the long haul, people need to relax, because if you instill panic selling in these people, you're going to have a run on the markets, and that's the last thing we need.
Look,
panicking is doing nothing.
Hold on, Peter. The ladies have the floor. Go ahead, Terry.
Gary Kay has some statistics that show that Wednesdays, for whatever reason, have been positive over the last year or two. So we might get a bounce. But we're going to close at our lows of the day, and you know that's not a good thing.
That is not a good thing.
No, it drives me crazy that people miss the Federal Reserve, and the other thing they miss is the power of the media, who is definitely heavily against this president. They'll exaggerate anything and scare the hell out of people.
Hold on a second. I wasn't told. Victoria Barrett, are you still there?
I'm still here,
You are.
David.
Forgive me. I didn't know you were playing in this. Go ahead.
I won't take it personally. Look, things are really rough right now, but markets climb walls of worry. We say that a lot, and history shows it's true.
This market's not climbing.
Hold on, Peter. Victoria hasn't had a chance to talk. Go.
Often the best time to get in the market is when it feels like the worst time. I'm not saying now is that moment, but probably sometime in the next 6 months is that moment.
All right. The best place to go swimming where somebody just drowned.
Yeah, but you know, you got to ask yourself, where is Ben Bernanke? We're going to close at our lowest level since April. That's when investment bankers started telling me that credit was starting to get harder to find. A lot of these loans were starting to be tougher to sell. Yeah. This has been going on. This is a slow motion trade. It's been going on for 9 months.
By the way, it is now at 12,500. It may actually, Johan, close the day below that benchmark at 12,500. What psychological effect would that have on traders?
Well, the psychological effect on these numbers are purely psychological, but it does drive the market. However, I still think that unless the earnings in the next quarter are really below what's anticipated, the market is still relatively fairly valued.
Okay. Look, gang, we gotta leave it at that because we are about 30 seconds away from the close of the trading day.
Selling is not panicking.
The trading day is coming to a close on a